right now I think is a great time to be investing in Midstream. Now that may seem surprising to some because Midstream stocks by and large have already outperformed by a large amount year to date. They've been on a tear recently, and even since the election, they've gone up another leg over bullishness for deregulation by the Trump administration and growth in energy production. That's all true, and I am a value investor. I tend not to chase sectors higher. However, with Midstream, I do believe it's an exception, especially if you have a long-term outlook. The reasons for this are many, and I'm going to share them in this video. But before I get into them, if you could please give this video a like, I'd greatly appreciate it. Help me aid in its distribution. Thank you so much. Okay, so what are these reasons why, despite Midstream soaring higher, I still think it's a really attractive buy, to the point where I'd even say the more it soars, the more I buy? Well, one of the big reasons is simply due to the fact that, like I already alluded to in the introduction, the environment for Midstream is set to be really, really favorable. And the reason for that is simply because the Trump administration, which is coming in here up into office here in the next couple of months, they've emphasized that they really want to increase energy production in the United States. And so they're going to take a couple approaches to that, but one of the big approaches is encouraging drilling and new oil and natural gas production while also deregulating, and so that new energy infrastructure can be constructed. And so that creates a very powerful tailwind for midstream companies, because they'll be able to invest in more growth projects that attract more attractive rates of return than they would have otherwise if regulations made high. Meanwhile, that increased demand means there are going to be more of these growth opportunities available, and existing infrastructure is going to have greater demand for its service, because there's more energy that needs to flow from production down to the downstream for where it's going to be consumed. And so the middlemen are the midstream, and so they're going to be the ones who are benefiting from that. So that's one big reason why I like midstream right now, but that's not even close to all of it. Second, I think that right now the fundamentals in the sector are better than they've ever been before. And that really comes down to, you just look at the balance sheets. Their leverage is really low because companies have really made an emphasis on paying down debt, reducing any kind of dependence on the equity markets, even paying off their preferreds, redeeming their preferred equities in many cases, like Energy Transfer's done, and several others. And so, because they saw the ESG movement was going on really strong there for a while. You had the COVID crash with energy prices crashing, energy demand crashing. You had, adverse regulatory policies from the current Biden administration. And so all that combined to tell midstream companies, this is not a very attractive environment to be investing aggressively in growth projects. And additionally, there was a lack of confidence in the equity, even in debt markets, being accessible to a lot of these hydrocarbon companies, given where ESG investing was headed for a while. And so they decided, we got to take matters in our own hands. We're generating a lot of cash flow from our investments. Instead of just, aggressively returning that to unit holders or pouring it into new growth projects, we're going to retain that capital, build up our coverage ratios of our distributions, and use that excess retained free cash flow to pay down debt, redeem preferreds, and self-fund the equity component of our growth projects. And so now you have a lot of midstream companies. In fact, the norm in the sector now is to have a low leverage ratio, a lot of free cash flow generation, fully funded internal growth projects, and no real dependence on capital markets, certainly for equity or preferred equity, and even in many cases, no requirements for debt. And as their debt matures on a regular basis, they're often just paying down that debt. And even if they have to refinance it, again, it's on an opportunistic basis, on their terms that benefits them. They're not forced to do it. And again, they paid off a lot of their lumpy debt, and so it's much more well-laddered. So the fundamentals are excellent in the sector, just even from a financial perspective. And certainly even from a business perspective, energy prices have not been low, but they haven't been hot. From a business perspective, energy prices have not been super high, but they haven't been extremely low either. And again, that production is expected to pick up because of the Trump administration coming in. And on top of that, despite the strong outperformance, valuations really are not that high still, especially when you compare them to other sectors. The yields, and many, you can get blue chip midstreams that yield 6 to 7% or even 8% in some cases. You got companies like Enbridge, Enterprise Products Partners, Energy Transfer, MPLX, Western Midstream, and several others that all yield between 6 and even over 8% in some cases. So you can get investment grade quality midstream companies with very safe distributions that have really nice yields. And they're growing, again, because of these self-funded growth projects. Some of them are buying back equity. The growth outlook is expected to pick up here thanks to, again, the deregulatory policies of the upcoming administration. And so you're getting a mid-single digits growth rate, sometimes higher, sometimes a little lower, but pretty decent with that mid to high single digit, very sustainable distribution yield. That's a double-digit total return right there per year before even considering potential valuation multiple expansion. Again, with relatively low risk because you got that long-durated contracted cash flows from these pipeline and other infrastructure assets. In some cases, they're even regulated, combined with that high yield, combined with that solid growth. So it's a very attractive proposition. And really, the other big reason why I like Midstream so much right now that seems to be overlooked is simply due to the fact that the AI boom is going on, and in many cases, energy consumption is going to go through the roof. And so if you have well-located infrastructure that has access to a lot of these data centers with pipelines for natural gas, for example, those are going to be really valuable toll roads, so to speak. And so companies like Enterprise Products Partners, Energy Transfer, Kinder Morgan, the Williams companies, several others, they all have good access to these data centers. And so their pipelines are going to be worth a lot, have a lot more long duration economic value for those infrastructure assets. And so that's another reason to be bullish about Midstream right now. Now, where am I buying in Midstream? Because, it's a fairly big space. Some of these stocks have really run up in valuation. And so, some of the ones I was bullish on earlier this year, I'm no longer quite as bullish on. For example, TC Energy. I don't think it's like grossly overvalued. In fact, I think it's probably fairly valued. It's not a bad position to hold. Good exposure to data centers, high percentage of regulated assets, solid growth profile, and a decent dividend yield still. But I just don't see it as a compelling or deeply undervalued opportunity. I think MPLX is really compelling right now because it has a near 8% distribution yield. It's been growing its distribution at a double-digit rate, and management's actually guided for a double-digit annualized distribution growth rate for the foreseeable future. So I think that's a compelling opportunity. I also like Enterprise Products Partners, as I've mentioned in other videos. Again, it's not quite the potential yield plus growth opportunity that MPLX is, but still solid, still double-digit combined yield plus growth outlook with, again, a very strong balance sheet. Not going to find a better one in the sector, and a lot of exposure to data centers. Energy Transfer is another one, kind of a cheaper, slightly riskier version of EPD. Of course, these all issue K1s, so you got to keep that in mind. If you like K1s, you don't mind them. Western Midstream is another opportunity. It has a really high distribution yield, very high single digit. That's covered fully by free cash flow. Delek Logistics Partners is another one. It yields over 11%. Again, it's even riskier. It's not investment grade, but its leverage ratio is still down in the low threes. Got some high quality assets with recently extended contracts to create a safer, more visible cash flow profile. So that's another interesting opportunity. If you really want to stay away from K1s, I think you can invest in an ETF like the Global X MLP ETF. That's ticker symbol MLPA. 0.45% expense ratio is not too bad. Well over 7% distribution yield that it pays out. That gives you diversified exposure to some of the bluest of the blue chip MLPs, but you don't have to deal with the K1. If you're just looking for a C corporation in the midstream space, probably Enbridge is the best value right now. And I just say that because they offer a really high dividend yield. That's well over 6%. It was solid 3 to 5% annualized growth potential. A large percentage of their assets are regulated. They have a strong natural gas utility segment now after some recent acquisitions that, for that kind of yield, that's pretty attractive in the utility space. And so you're getting a pretty good value effectively with the safety of a utility, a BBB plus credit rating. They even have a growing renewable power production segment. So you're getting a little bit of a renewable yield co in there. So really Enbridge is almost like an ETF in and of itself for, safe contracted energy infrastructure companies, combining midstream utilities and renewable yield co qualities. So that's really my view on the midstream space right now. Again, I think it's not nearly as opportunistic as it was, say, a year ago or certainly 2 or 3 years ago when I was really loading up. But I still see a lot of opportunity in this space. Definitely the worst places you can put your money right now. And so if you want income, but you're also looking for attractive growth from the AI space that's not way overpriced, I think Midstream is the place to be right now. Hope this video added value to you. If it did, please subscribe to my channel. I greatly appreciate it. Thank you so much. See you next time.